All right. Want to go ahead and get started. I want to welcome everyone to this week's session with Dr. Anam here. Passive income for physicians. We're looking to help healthcare professionals build wealth by investing in real estate. So today's topic is big mistakes healthcare professionals should avoid in real estate. And really excited to talk about this topic because a lot of healthcare professionals get into real estate or think they want to get into real estate. And there's a lot of unknowns. There's a lot of things that you need to be very mindful of before you get into real estate, whether it's residential real estate, buying your own investment properties, or commercial real estate, and you're passively investing, you're partnering with a firm like Headway Capital. There's a lot of things you really need to be considerate of, because if you're not very careful, you will very quickly find that you bought yourself another job, right? So we want to make sure that we uncover all those things, that we talk about all those things today. And we're going to go over some things that we've experienced ourselves. Anam and Sid, they had a very large residential single family house portfolio. I've owned single family houses. And there's just things you need to know to be careful of and mindful of. There's no right or wrong from a strategy standpoint, but you need to ask yourself these questions before you get into real estate, before you make decisions and start investing your hard-earned money. So I'm excited to get started. Nam, if you're ready, we're gonna go ahead and kick it off.
Yes. Hello, everyone. Welcome to Legacy Wednesday. Of course, we're really excited to have you all here, and thank you for taking our time during evening on a working day, of course. But this webinar series, of course, focused on educating healthcare professionals and focused on people who are trying to learn more about real estate investment opportunities and other pretty much secure investment opportunities. So the topic of our webinar today is big mistakes healthcare professionals should avoid making in real estate. Next slide, please. So first and foremost, a quick disclaimer. This webinar is for education purposes only and should not be considered as a legal or investment advice. Now, this is really important. The information in this webinar does not represent an offer to solicit or an offer to purchase an investment. We advise everyone to consult their own financial advisors, their own attorneys, their CPAs, before jumping into any investment opportunity. Of course, you need to do your own due diligence. And particularly if you have specific tax related questions, you should consult your own CPAs regarding that. A little bit introducing you all to Headway Capital. So people who are new here, Headway Capital was founded by my husband and myself. My husband, Sid Shameen, is the CEO and founder of Headway Capital. And we pretty much founded Headway Capital back in 2017 with the sole purpose of having a secure place to having a platform to secure our own investments. So that was our focus at that time. Prior to Headway Capital, both of us were primarily investing into single-family homes, as Brian just mentioned. I mean, he was doing very similarly, and as I think a lot of you on this webinar today are probably doing the same. And we actually had a pretty sizable portfolio at that time, but we were pretty much getting exhausted. We weren't gaining the momentum, or we were managing all these single family properties. There was a lot of work that was involved. We weren't making as much money as we had expected. We weren't growing at the pace as we wanted for ourselves, and we didn't feel that this was going to lead us to our secure. This wasn't going to be our secure retirement plan for us. So in 2017, we kind of educated ourselves more about multifamily real estate investment opportunities and came up with Headway Capital. Of course, Sid is primarily managing Headway Capital, while I am a full-time consultant gastroenterologist. So I have my own very busy practice as well. But I, over the past years, have learned a lot from him, from our core team, from meeting a lot of people in this process. I've learned a lot from our investors. A lot of them are our friends, very close friends, like family now. And attended a lot of conferences, and I've personally educated myself, and to the point at which I enjoy talking to people about real estate. So I think the role that I play is educating other healthcare professionals, colleagues that I work with, talking to investors. So I'm always here available to answer any questions and helping brainstorm any ideas or things that you just have to run by someone. So definitely that's what I'm involved in. I have Brian here. I would let Brian introduce himself and tell you a little bit about his experience, his journey. And of course, Omer Naqvi is our financial and investment officer. So he is a point of contact as well.
Yeah, I appreciate that, Anam. As she mentioned, I got started in real estate on the single family side. My journey is not that far behind theirs, but I started in real estate in 2018. I was buying single family houses and very quickly realized that I was not making as much money as I hoped I would, and it was a boatload of work. I was working full time. I was in the hospitality space. I was spending 50, 60 hours a week managing 50, 60, 70 employees at the time. So I just didn't have the time to be focusing on tenants and toilets, as they like to say in the real estate space. So I decided I needed to pivot. I needed to scale up and get into the commercial space. And that's what led me down the rabbit hole of learning about the power of multifamily commercial real estate investing and the power of growing your NOI and cap rates and how that can really help you not only build cash flow, but really build long-term wealth, which is really what we're all here for. Most people that are investing in these these vehicles are already making a pretty solid income. So they don't necessarily have a cash flow issue. They have more of an equity issue. They have a capital preservation issue. So the more and more I learned about it, the more and more I fell in love with it. And I love talking to investors. So I'm your primary point of contact forever, looking to get into our private investor club and learn more about partnering with us at Headway. We'll have our contact information at the end, but don't hesitate to reach out to me. I'll throw it back to you now.
Thank you, Brian. So a little bit about our portfolio, which we're very proud of. So since 2017, we've really expanded Headway Capital, and this wasn't possible without our, of course, our core team, as well as our investors. So currently we have about 539 million assets under management. So Headway Capital we have our own Headway Capital property management company. So we manage our own assets as well. We have about more than 3,300 units under management. Our goal is to provide our investors about 7 to 10% preferred return per year, and about 25 to 30% cumulative return per year after the final sale, which we expect between 3 to 5 years. So that's what our goal is, and we're very, very proud of our track record, and we continue to grow. I think quickly jumping onto our topic today. So our topic is big mistakes that healthcare professionals should avoid in real estate. And what we'll cover today is basically talking about 4 major mistakes. So mistake number 1 would be lack of due diligence. Mistake number 2 would be not being able to understand what leverage is. Mistake number 3 would be emotional investing, and mistake number 4 would be investing without knowing or ignoring tax implications. Next slide, please. So a little bit about why you would be at risk. So as a physician, I mean, I can personally vouch for it. I think most of us are just always struggling with time. We are financially very capable. We are smart. We are educated. We've spent years, training and reaching where we are today. But that all our years of training, all our experience, expertise in our specific fields, specializations, research, that allows us a lot of, makes us very overconfident. And we think that, we probably would be able to manage things that we have no knowledge about as well. So I personally when I started looking into, this financial space, started looking into, real estate investment opportunities, started learning more about FIRE, which is financial independence and retiring early opportunities. I felt that I lacked a ton of knowledge. Nobody in medical school taught me anything about coding, let alone more anything about real estate. So, that I think required me to learn a lot, spend a lot of time trying to educate myself. And at this point, I feel that if somebody starts on that journey, they're prone to making a lot of mistakes. Mistakes could be because of overconfidence that we can do it all. Mistakes could be because of lack of time. We're so invested in our patients and patient care. We're emotionally, physically, mentally exhausted, which leaves us very little time to invest with our families, invest into ourselves, and let alone, thinking about different investment opportunities or investment strategies. So we definitely lack that time to focus on these. And also a lot of us are very risk averse. The nature of our job makes us makes us very risk averse. We're looking to very secure. We try to be very conservative. We think we should do it all. We do not like involving a lot of people in our personal matters. So I think all these put us at really, really high risk of making a lot of mistakes or wasting a lot of years before we choose better for ourselves. Moving on to next slide. So mistake number one would be lack of due diligence. So healthcare professionals, most of us do not have a financial background. Some of us do, and I think they do really well. But after talking to probably upwards of hundreds of healthcare professionals, one common theme is that they don't know how to manage their finances. They're making a lot of money, but a lot of money is going to be sitting in their bank account. And they just wait to learn more about different investment opportunities. And once they do find investment opportunities, they don't know how to do due diligence. Due diligence is basically trying to run the financials, trying to identify a good investment opportunity and an asset which will actually make money for you, which is secure, which provides the returns that you're expecting, and which is just you're not going to be wasting money on it. We do not have experience analyzing a business plan. We do not have time to do so. We do not have experience with doing market research. We do not have experience in analyzing financials, and we do not have experience with operating an asset. Now, this, just learning the due diligence process may take years. And this lack of experience leads to lack of doing due diligence, and of course, that leads to you choosing the wrong asset for yourself. Next slide, please. Mistake number two would be understanding leverage. So I think leverage is a very important term. I, starting off, didn't even know what leverage meant, but it's basically the loan that you take. Too much leverage, if you identify an asset, for instance, and you feel that you've done your due diligence, I think it's very important to understand what kind of loan options you have. Too much leverage, taking too much loan would put you at risk of, in case your asset is not performing well, you end up paying a lot of money out of pocket to break even. Too little, not taking enough leverage would definitely slow your growth as well. Finding out which loan product is best for you and best for the project, and definitely passively, if you do ultimately decide on a project, you choose the wrong debt for your business plan. So those are all huge mistakes. I think we at Hedwig Capital, one of our secret sauce is we have a very solid core team. We have years of experience of doing due diligence. We have people who have years of experience vetting different investment opportunities. People are experienced with loan options. And, I think that is our secret sauce for success, that, after our thorough due diligence, our ability to identify really, really solid investment opportunities, assets for our investors, and assets that produce and give us excellent returns has led us to grow really, really fast over the past few years. Next slide, please. I think mistake number 3 would be emotional investing. It's fear of missing out. I just describe it as, a lot of my friends with young kids or kids of any age, pretty much, they put their kids into multiple um, different activities, just thinking that if they don't do that, they're going to be missing out. And similarly, you probably end up doing the same when you're investing. Fear of missing out, may lead you to make wrong decisions for yourself, or you may start investing into multiple different investment opportunities that don't produce the returns that you're expecting for yourself. You you're not only looking at potential returns, but you're you just have a time crunch. You have to deploy or put your money somewhere, and that is not a smart move. And you're trying to do it all by your own, and you're not consulting with experts. I think finding a part of this journey is also identifying people that you really trust, that identifying people that you feel comfortable, um, sort of investing your money with them. And of course, taking help from experts, people who really know the process, because learning the process may take years, and that's a lot of years that you waste that could have potentially given you a lot of very solid returns. So I think that is definitely a very, very important part of this journey. Next slide, please. Um, Mistake number 4 would be ignoring tax implications. I think you should definitely invest after consulting with your CPA. I think a lot of people do that, but I think trying to find the right CPA is also really important, because a lot of times your CPA may not educate you regarding all the tax implications or all the tax benefits that you can get from different types of investment opportunities, or how you could potentially be saving taxes. So I think that is another area. We try not to get into it a lot. We definitely advise all our investors to discuss their tax implications with their CPA. But I think it's very important for you to understand active versus passive income opportunities. Active investment would all, of course, be an asset that you're managing on your own. But IRS tax codes require you to invest a certain number of hours per week to be an active investor. So that is really, really important to understand, that being a full-time physician may not allow you to be a full-time active investor as well. So, at Headway Capital, we provide really solid passive investment opportunities for our investors, which allow you to be hands-off, to be, we have, of course, have an open book policy. We send financials once you decide to invest in an asset that you like. And these opportunities allow you to be pretty much not have to invest a lot of time managing them. And of course, the tax implications are something that you will have to discuss with your own CPA. And not looking for strategies based on your personal situation. I think that's really important as well. Everybody's situation is different. Their risk taking, how much risk they can take is different. So doing what you're comfortable with is really, really important. But in addition to that, I think finding I think it all boils down to finding the right group of people that you trust and you feel comfortable with your money. So I think real estate, amongst all other investment opportunities, actually provides really, really solid tax benefits. Everybody's situation is different, so we again advise you to consult with your CPA regarding regarding the tax implication. Next slide, please. So the final word would be, next slide, please. Understanding, you should spend some time understanding how to analyze an investment, and this is very, very important. A lot of us may not have time to do so, so finding experts to help you through the process is really important. and finding the right investment opportunity where people can do this analysis for you, can do your due diligence for you, is very beneficial. So definitely that is something that you should all understand. Um, do, do you know if the investment has the right debt for you? You should leave your emotions out of your decisions, and you should make sure that you speak to your CPA and your financial advisor before investing. I'm going to move to Brian. If there's anything, Brian, that you would like to add to this, but then Brian will also tell you about different investment opportunities that are available at Headway Capital and how to get in touch with him, because all the investment opportunities that we provide at Headway Capital may not be available to you unless you are a part of our preferred investor group. So we definitely encourage you all to join our investor list so that every time an investment opportunity comes in, you have a chance to view it and be a part of the journey as well.
Awesome. Great job, Anam. Appreciate you sharing your insights and your knowledge from your seat as a healthcare professional. I think a lot of these things you covered, all these mistakes, and especially, the first one really hit home for me, having, a relationship with you and having people that I know that have been nurses and different things as well. There's a lot of risk involved with being in a position where you make a great income, but you're also very short on time. So going through all these mistakes that we've seen from maybe mistakes we've made on our own when we're getting started and we were new, and then mistakes we've seen from other people, right? Like not understanding how to analyze a deal, not understanding if the deal has the right type of debt on it. That can kill your cash flow. Not being emotional is really hard. We like to say we're not emotional, but I think we all know there's some emotion involved with every decision, but trying to keep emotions out as much as we possibly can so we don't make an emotional decision, especially just because everybody else was doing that. We saw that in 2021. Everybody wanted to touch real estate. So some people bought some bad deals and now they're regretting it, right? So you want to keep emotions out of it. And then ignoring taxes. I think this is really important as well because everybody's situation is different, right? So you really got to speak to a qualified CPA. Not all CPAs are cut from the same cloth. There's some CPAs that know absolutely very, very, very little about real estate, and they know very little about passively investing in real estate, if that's why you're on this call. So you definitely want to make sure that you have the right CPA for your investment strategy. So if you have a CPA that you love, but they know absolutely nothing about real estate, unfortunately, if you really, really want to get into real estate, you're probably going to need a new CPA because they're not going to know how to take advantage of the tax codes that can benefit you as an investor, whether you're active or passive. So again, just all great stuff, all mistakes we've seen before, and the questions as well, just kind of leaving the audience. But I'm going to jump right in real quick and talk about some of our passive investment opportunities that we provide here at Headway. So we just talked about all the potential mistakes a healthcare professional can avoid. These mistakes can apply to any of these investment opportunities you see on your screen, but these are the areas that we like to consider ourselves experts at. So here at Headway, we provide investment opportunities in the multifamily space. Another word for that is apartments. We also provide investment opportunities in another hard asset in car washes from time to time as well. Another lucrative cash flowing asset class. We also have service businesses that from time to time we offer into different types of businesses that provide services in the real estate sector, things like roofing, construction. And then the last opportunity, which I'll talk about real quick, is the Headway Capital Debt Fund offering, which is actually an offering that we just launched that we're really excited about. That's for accredited investors. So if you're looking to put some money to work and you don't trust the S&P 500 in the stock market right now, and if you're like me and you're buying that these CDs are not going to be able to hold the rates they're selling at now, I think they're going to call all those CDs back in 6 or 12 months when rates start to drop. You might think you're getting a 5% CD, but the bank can call that back at any time and you're not going to get your 1, 2, or 3-year CD. Then I like investing in hard assets that I know are cash flowing. That's why I love real estate. Then the real estate debt fund might be for you. We pay at 8% preferred return to all of our investors who invest $100,000 or more. So if you're looking to beat the market and put some of your cash in real estate, the Headway Capital Debt Fund is a great opportunity for you. If you want to get that 8% return, it requires a $100,000 minimum. If you want to put a little bit less in, there's a different return option there, but the minimum is $25,000 if you're looking to make a smaller investment. If you'd like to learn more about that, scan the QR code on your screen or shoot us an email or give us a call after this webinar. You can shoot us a text as well. and we'll get you started on the application process. And I'm also happy to provide any due diligence documents so you can learn more about this investment opportunity and how it could potentially benefit you. If you'd like to schedule a call with me, QR code on your left-hand side of your screen. Scan it. It's going to go straight to my calendar. You can scan you can scan a code and book a call at your convenience. Or again, you can reach out to us. And if you'd like to request an invite to our private investor club, this is a club that we have for all of our accredited investors. We have over 400 active members inside of the private investor club that have been repeat investors for us. If you'd like to apply to join the investors club, scan the QR code on the right. It's going to take you to a short application just asking you about your investment goals. It's going to make sure you're an accredited investor, and it's going to give you the opportunity to apply and also schedule a call with me. If you don't schedule the call, we'll reach out to you personally, a member of our team, to try to get you on the phone, because we want to build a relationship with all of our investors to make sure we build a long-term relationships and we can both be very happy working together. So let's dive right into Q&A. And we've got quite a number of questions coming in. I see 6 or 7 here. So I'm just going to start reading these off, and we can both kind of chip in at them, and we can both share our insights into here. Let me see. The first one here is, what is the number one mistake you see healthcare professionals make who are getting into real estate? Do you want to answer that one? I know you kind of alluded to it in the conversation, but what's the number one mistake you think you see them make?
I think I would think that not trusting someone, because so most of the time when we're in a group talking about real estate, I frequently hear people saying that we don't trust other people managing our money. So I think we as physicians are very risk averse. We do not want to take the risk because we lack the knowledge. So I think self-educating yourself is really important, but understanding that real estate is probably the most secure investment opportunity that is out there. Understanding that it has a multitude of benefits, just not, the returns which multiple other investment opportunities could potentially offer you, but understanding that it's not volatile, it's not exposed to market instability, your money is not being exposed to inflation in your bank account, you have it safely deposited somewhere, the money is growing, you're getting tax benefits. I think that understanding that is something that we really lack. Biggest mistake would be, I think biggest mistake would be not trusting somebody, not trying to even find the right group of people to invest with. I think I've seen that's the common theme amongst at least most healthcare providers that I talk to.
Yeah, that's definitely a great one. I will tell you, I've spoken to many of your colleagues that have been referred over to us, and I think a big one too that I've seen, I don't know if it's number 1, but just maybe number 2 or somewhere in the top 5, is a lot of people, and this is common for a lot of novice investors, I would say, is they get shiny object syndrome, and they chase the thing that they think has the highest return versus looking at it from a risk standpoint, right? So you just kind of mentioned this, Anam. You can go find investments that are paying a much higher return. Well, the reason they're paying a higher return is because they have more risk, right? So understanding that real estate is a phenomenal risk-adjusted investment, and you're going to be parking your capital in a hard asset, a building you can touch that's not going to magically disappear, like a crypto investment or stock investment that can just like literally go to zero overnight. That's not a common thing in real estate. You have a hard building, you've got residents, you've got income coming in. Of course, you have to responsibly manage it, and you have to responsibly have the right debt. And there's a bunch of ifs there. But as long as you're investing with the right people you trust, as you mentioned, and you're not chasing shiny objects and looking for the highest return possible, I think that you're going to be in pretty good hands long term. So I think it's just about compounding, right? Investing now and realizing this is a long-term vehicle, and that healthy cash flow that you're investing for 10, 20, 30, 40 years, it's going to pay off in the long run.
I think, Brian, have you also noticed that a lot of people think that once they invest with somebody, their money is just going to be handed off to other third-party investment company and property management companies? I think that's a common theme as well. They think that their asset is not going to perform because somebody else who they don't know, like XYZ, is going to be managing those assets. They're not going to get the required returns. So we're different at Headway Capital here. We definitely have our own property management company. We manage our own assets. We allow our investors and our partners a lot of we allow them to be a part of this journey. They can be as involved as they want to be, or as less involved as they want to be. I think that's something that's very unique at Hedwig Capital, that we ensure that our processes are in place. We're very disciplined, and then we make sure that our residents are happy who are living on our properties, but our investors are happy as well, and everybody's getting paid.
Agreed. That's a great point. Great point. Next question here on here. This is a little bit more of a technical question, but I'd love to hear your insight as well. And what's the best way to learn how to analyze a market? I think we saw that on slide number 1. I'm going to go back here. It says not experienced doing market research. I'm sorry, one more. Not experienced doing market. Where to go? There it is. Not experienced doing market research. So that's a great question. I will tell you my experience. For me, I think it's all about just engulfing yourself in that market. If you're going to invest pick a market, right? If you say, hey, I really want to invest in Dallas, Texas, Houston, Texas, San Antonio. I don't know. I'm in Texas, so I'm picking the cities that we love here. Then you need to be an expert in that market, which is why it's time consuming, right? This is why we partner with experts. But even when you're partnering with somebody, you really want to understand that market, right? Where are the jobs coming from, right? So a place like Houston is very obvious. We live here, right? So you have a lot of oil and gas jobs. You've got Exxon campuses and different companies. All the big companies are here in Houston. We have a huge medical field, right? We have the medical campus here that provides tons and tons of jobs. We've got the Port of Houston. There's a lot of blue collar jobs, people that work in the port, right? So looking at each city and understanding where the jobs are coming from, that's the best way to understand market research, because what you want to make sure you're looking for is you want to have job stability and you want to have population and job growth, because at the end of the day, we are renting we're renting apartment homes to people, right? And if they can't pay their rent, that's a problem. They pay their rent by having a good job. So looking at the jobs in the market, understanding what are the jobs paying, what's the average household income is also really important. You want to type in Houston household income or Dallas household income, compare it to what the national average household income. So if the national average household income is, say 50,000 and you're investing in a city that's 35,000, well, that's a problem. It's probably a pretty blue collar city with not a lot of the high paying jobs. It's way below the average national income. You got to be careful in markets like that. But at the end of the day, without getting too technical about the numbers, is you really have to engulf yourself in the market, pick a market you really like, and then you have to lean on the experts, right? So we're experts here at Headway. These investment firms, we have to be experts into the markets we're investing in. Otherwise, we're going to put ourselves and our investors at risk. So it's important that, again, going back to it, you just find experts that know that market like the back of their hand, and that you have your own due diligence as well, and you study the markets. All right. Going to the next question. FOMO can get a lot of people in trouble. Thanks for the reminder. That's funny. Can my normal CPA help with real estate investing? I think we kind of touched about that a little bit already. Really important that you ask your CPA. And if you ask, they might say yes anyway. But I would ask more detailed questions. I would ask them questions like, how many of your clients are active real estate investors? And see what they say. How many of your clients have passive real estate investments? See what they say. Ask them if they know what a K1 is. And if they deal with K1s on a regular basis. A K1 is a document that we provide to our investors who passively invest with us that shows their income that they've gotten from the investment opportunity over the course of that year. And it also shows the depreciation that they were able to capture to offset that income. Ideally, it's a big negative number showing that you were able to make some money and not pay any taxes on it. Again, everybody's situation is different, but that's sort of the base case. If you talk to a CPA and they're like, oh yeah, we don't deal with K1s, none of our clients have K1s, you're probably dealing with a firm or a CPA that does not deal with a lot of active or passive real estate investors, and you probably need to find somebody else, right? So I can't really answer that question if a normal CPA can help. They don't have like special real estate designations, at least not in my experience, and I'm talking to quite a few. You just have to ask really smart questions. Don't just say, hey, do you work with real estate investors? They're going to all say yeah, because they want your business, right? So you got to make sure you ask really smart questions so you're not dealing with the wrong CPA or the wrong financial advisor, right? This is a good question. Go ahead. Go ahead.
Brian, one more thing. I'm just going to give you an example of recently I spoke to a surgeon who actually has, he was complaining about the amount of money tax that he was paying. And then, he started talking about, his investment opportunities, how he's invested into single family, of course, homes that most people do have. But then he also had some short-term rentals that he and his wife's spouse doesn't work. And he said that his CPA has never told him about how he could possibly be saving taxes through his short-term rentals even. So I was like, and he's had those for years now. So I think that's right there and then that, your CPA had, and he's lost thousands. I mean, over the past few years, possibly lost thousands of dollars in taxes, which he could have easily saved because he definitely could have saved them.
Yeah.
But people are just not aware.
Right. Especially as a surgeon, again, I don't know what type of income he makes, but it's probably tens of thousands, if not hundreds of thousands of dollars over the years. So yeah, understanding the tax code and giving your your CPA is not always a tax advisor, but the good ones will at least give you guidance.
Right.
And say, hey, your wife doesn't work. If she became a full-time real estate professional, you could use that designation and all the depreciation you're getting from all your investments to actually offset your active income as a surgeon. Again, I'm not a CPA, but just my basic understanding is that's advice you can give. And of course, you have to do your research to make sure that's legal. That's what their job is. But yes, I hear stories like that all the time, and it's always like, what? They're always very shocked to hear that they spent money that they could have saved. But that's why you have to have a good tax advisor and a good CPA. Is it better to first buy single family homes before investing in commercial? I'll let you take that one, because that seems to be where a lot of physicians get started.
Because we all do that. We all buy our own first homes, and we feel that is something that we can definitely do. We feel comfortable in it. It's a smaller investment. Of course, you're getting some returns. Some people have been able to make a lot of money, but I think it definitely doesn't allow you. I mean, we moved away from it. We did it for years. We had more than 30 houses that we were single family homes that we were managing at one time. It was a lot of work, and it was definitely it's comparing the amount of work that we were putting in managing them. We were definitely not getting enough returns. Of course, these homes they could be vacant for months. Of course, there's a lot of maintenance involved. There's a lot of work that's involved. So if somebody had to ask me for their advice now, I would be like, buy your own home for sure, but you should just dive into multifamily real estate. I think that definitely provides you a more solid and better return. And if you're a passive investor, you can just not be spending as much time managing that investment and still possibly be getting the same amount of returns through it.
I would agree 100%. If you have the financial capacity to invest passively as a real estate, I would just go straight into passive investing in the asset class that is most attractive to you. Ideally, we love multifamily here, but there's car washes, there's self-storage, there's industrial, there's triple net, whatever floats your boat. You should focus on that because your time is your most valuable asset as a healthcare professional. It's not necessarily, the down payment, the 20% down payment that you would put on a single family house just to make $200 a month or $250 a month, right? Like that's not changing your life. If anything, it's causing more headaches than anything else, right? For that amount of cash, is the $3,000 or $4,000 a year that you're going to get in cash flow, is that worth the headaches that you're getting, spending time away from your family, answering phone calls from property manager if you have one, or from the tenant if you don't have one? For the 9 out of 10 people, they're going to say no. Now, if you're one of those people that says, like we kind of talked about, you want to do it all on your own and you want to learn the hard way, then more power to you. But we can tell you from experience that a very large percentage of people end up coming back to us saying, you were right, I shouldn't have bought all those houses. And they want to sell them all and get into larger commercial real estate, either as an active or passive investor, because it's just the best way to go. So I agree. If I am short on time as a physician, where can I find people to partner with? Anam, do you want to give them some tips on where they could find people?
Where they can find people to partner with, I would be like similar is the way you're here, you're attending this webinar. We provide really solid investment opportunities. You just have to find the right people you trust. I would definitely educate myself. I used to watch a ton of webinars when I started my journey. Of course, I had my husband who definitely was very, very knowledgeable in this area, and he possibly had more time to invest as well. But if I was doing it by myself, I probably would have been very, very lost. But I would say that attend webinars, talk to people, um, and talk to us. Talk to Brian. I think you just have to find people that you feel comfortable with. And there are a lot of investment opportunities out there. So um,
Right.
definitely, I think you just have to educate yourself. I don't know, there is no shortcut to it, but
Right. Unfortunately, there's no
definitely there.
secret, right? You just have to talk to people. I think being
Yeah, you just have to talk.
being open, right? So when you're with your colleagues and you're socializing and you're on the weekends and you're hanging out with your colleagues, you have to just talk about what you're doing, because what you're going to find is the more you talk about, and this can be a very I'm not a healthcare professional, so I wouldn't know, but I don't know if this comes up in conversation very often, but if people are not talking about their protecting their wealth, building their wealth, creating generational wealth, investing, you need to be that person to kind of maybe start a group, right? Start a group of friends that are all investing in real estate. They're all passive investing. They're all active investing, whichever one you're in, and just share ideas with each other, because there are lots of people that need to learn about this and they just don't know about it. And they need a network. They need a network of people like Anam, like what you're doing, where other healthcare professionals. They need to partner with solid investment firms like Headway. But there's a lot of great places you can find great partners, but you have to talk, you have to speak, you have to open your mouth, and don't think, it goes back to our original point, don't think you have to do it all on your own.
No.
And sitting quietly reading a book, like, you need to talk to people as much as you can. Perfect. Well, those are all the questions I see for tonight. So I do want to thank everyone. Anam, any final words?
No, I would like to thank all of you. Of course, we do these series I do this webinar every 2 weeks, so I'll see you in 2 weeks. But try to sign up. Try to schedule a call with Brian or with myself, and we're here to help you through the process. But definitely start the journey early. The more time you spend is a lot of time and money wasted for sure.
Agreed. Yeah, I will echo that. Thank everyone for being here. There's no time better than the present. A lot of people are very nervous about the economy, a recession, what's going on with interest rates. We didn't touch on any of that today, but what's really important is that you get started on your educational journey and you get started on your relationship journey, because these investment opportunities that we present are all for people we have relationships with. So whether you want to invest today, or you want to invest in 3 months, or you want to invest in 6 months, or you want to invest in a year or more, when you feel the timing is right, there's no pressure here. We want to have a relationship with you, and it's better to start that relationship today. So as Anam was alluding to, reach out to us, go to our website, headwayinvestment.com, or you can email me directly, brian@headwaycapital.us, or you can email our team investor at headwaycapital.us, and somebody from our team will reach out to you. But I want to thank everybody for being here, and we look forward to seeing you again in a couple of weeks.
Thank you.
Thank you.